Now, taxpayers and tax professionals in Nigeria have been informed by the country's Federal Inland Revenue Service that the new gazetted withholding tax laws will go into effect on January 1st, 2025. Nigeria released the new withholding tax laws on Wednesday. Small enterprises with yearly revenue of less than 25 million naira are free from paying withholding tax under the new regulations, which aims to lower rates. Now, Adediran, with partner commercial practice in Nigeria, joins me now to discuss this further. Adeyemi, good morning to you. It's a pleasure to have you on the Global Business Report. Yeah, I mean, new development here. What should we know about this new withholding tax? What are the implications, firstly, for regulations on business owners here?
So withholding tax, in a nutshell, is an advance payment of income tax. So the government is saying that rather than wait till the end of the year for companies to pay their taxes, they want to collect some of those taxes ahead of time. So when a supplier provides goods or services to a buyer, right, the buyer is required to withhold part of those payments and remit to the government. So what this regulation is doing really is to simplify the withholding tax process. And one of the key aspects of the regulation is the fact that certain rates that were applicable to some transactions in the past are being reduced. And it also clarifies that some transactions are exempted from withholding tax deduction, especially for small businesses with revenue below 25 million. They have been exempted from withholding tax from transactions. Other exemptions are applicable relates to ticket sales, internet services, telephone charges. Those are exempted from tax as well.
All right. I mean, we know that the previous regime faced some challenges such as, ambiguity due to the expanded scope of transactions, which put a strain on businesses. You've just highlighted the exemptions around small businesses. In what ways can will this new system, would it circumvent the older issues we had previously?
Yeah. So essentially what the government is saying is that if there's a reduction in rates applicable to certain transactions, for instance, what that does is to put more money in the hands of businesses. So rather than withhold tax at 5%, we withhold tax at 2%. So businesses have more money to transact for transactions, for their businesses. Also, what it does, there's an aspect of the regulation that simplified the credit system, the withholding tax credit system. In the past, it was difficult for companies to obtain withholding tax credits when deductions are made on the monies that are due to them. So they end up paying taxes that had already been withheld by the buyers. So what this has done is to say that irrespective of the fact that where a company withholds tax on the transaction and has not remitted to the FIRS or the applicable tax authority, the company that is due to enjoy that tax credit, once a receipt is issued by the buyer to the seller can take that receipt to the FIRS and claim and apply for a withholding tax credit. So it's not dependent on whether the buyer has remitted the taxes withheld or not.
No,
so that's kind of simplifies the process for them.
Yeah, it certainly does. I mean, of course, now we're alluding to measures put in place for tax evasion and avoidance. Yeah. What are these measures in the sense of punitive measures?
Yeah. So what the regulation has also done is to encourage people to register for taxes or businesses to register for taxes. So if you have a situation where a company is transacting business with another entity that has not registered for taxes, what the regulation says is that the withholding tax applicable on that transaction should be twice that amount. So that's kind of punitive, So companies that don't want the withholding tax rate to be twice the amount that is due will be encouraged to register for taxes. So in a situation where a company withholds taxes and also does not remit to the government, then there's a penalty and interest applicable on that as well. Then there's an administrative penalty where you do not withhold at all and you pay the entire amount to the supplier. There's an administrative penalty that is applicable in the law. So measures have been put in place in the law to encourage people to comply with the provisions of the taxes. And if you, in general, you want to encourage people to voluntarily comply, not to wait for the tax authority to conduct an audit before you then have to pay penalty and interest. So this, with the reduction in rates, with the exemption for manufacturing companies, sale of tickets, airline tickets, sale of telecommunication, data, internet data services, all of those exemptions is to encourage compliance. And I see more of that, more businesses complying with the provisions of the law going forward.
So there's certainly a lot of tightening going on here. But what about timing of deduction? What clarity has been provided on this?
So in the past, right, what the law provided for was that when a business engages in a transaction with another business, that company is required to withhold tax when the amount is due for payment or where the amount is recognized in its books. So you have a situation where two businesses are engaged in a transaction and the amount is not due for payment, but then you have to kind of borrow money to be able to pay the government, as long as you recognize that transaction in your books. But what this regulation is saying is that you only are required to withhold tax when the amount is due for payment or where the obligation is settled in any other way, but not when you recognize the amount in your books. So that kind of helps companies to comply when they are actually paying the supplier for the transaction. The other aspect that this has also done is, I think, it relates to the commencement dates of this regulation. And there are, initially when the regulation was signed by the Minister for Finance, there was a date of 1st of July that companies were to comply with. But what this gazetted version has done is to provide time for companies to update their software, their accounting software, to be able to put proper measures in place for the new regulation. So the implementation date, as provided in the regulations, is now 1st of January 2025. So that kind of helps both the FIRS and companies to put measures in place to comply with the regulations. Yeah.
So it certainly irons out a lot of rough edges, what you've said so far. And of course, with this date, let's talk about that. Do you think that's enough time?
Talk about what?
The date.
Yeah, I think it's enough
for
time.
implementation.
Initially, it was more like giving people like 2 or 3 days to comply because the news just entered the public space. But with 3 months, I think both the FIRS and companies that are required to withhold tax will be able to update their accounting software, the FIRS, in terms of the tax promax. Then the state tax authorities will also have to update their system to be able to accommodate the new regulation. So I think the dates given, 3 months period, should be sufficient.
That's fair enough.
Yeah.
All right. And of course, public sensitization, which you're doing now, is also very key. I want to talk about something which, personally affects me, consumption tax, which is a huge point of concern. We know that the states levy independently, and many times it overlaps with the federal VAT. What has been put in place to relieve this burden of consumers?
I think the committee enacted by the presidency, the Committee on Fiscal Policy and Tax Reforms, what I understand is that they are looking at harmonizing all the tax laws so that companies won't have to have that burden of multiple taxation. So I would say there will be an alignment. I expect there should be an alignment between the federal government and the state government with respect to VAT and consumption taxes so that individuals and companies are not burdened with multiple taxation on the same transaction. So this is, I believe, is one of the many developments that are yet to come. So we'll continue to, there has been a clamor that the CBN is doing a lot in the monetary space. I think what this is doing is to balance what the CBN is doing in the fiscal space as well, so that at the end, consumers, companies can feel the effect of the reforms that the government is doing.
All right, so there's some light at the end of the tunnel, it appears, right? Well, let's wrap up with, the idea of returns. Are there any changes in submission deadlines? Are there any penalties if you fail to, meet that time?
Yeah, like I mentioned, penalties and interest are applicable when you deduct and you do not remit, and when you do not deduct at all. What the regulations provide is that when you deduct, you need to remit to the FIRS within the 21st day of the following month after deduction has been made. For states' internal regulatory authority, for transactions that are due to them, you are supposed to file your returns before the 30th day of the following month. So it's important for taxpayers to take note of all the deadlines that are stipulated in the regulation so that they can comply with it in order to avoid interest and penalty. You just remit what is due, and then you won't have to pay additional amount.
All right, avoid the inevitable if you fail to
Yeah,
if you fail to comply. DME, many thanks for joining the Global Business Report, and of course we'll keep our eyes peeled and see how things roll out on the first.